Hello and welcome to the Stock Market Palantir. Don't forget to subscribe and drop your comments below. All right, let's go watch the analysis.
Okay, let's get straight to the numbers. The date is February 12th, 2026. Closing price for MP Materials, $57.30. We saw a daily movement down 5.41%. Volume was healthy, about 6.64 million shares traded. Right now, the stock is trying to consolidate. It is, resting on technical support in that $55 to $60 range. But let's be honest about the chart. It looks painful. We are down significantly from those highs near $99 back in October of last year.
Resting on support is a very charitable way to describe a knife that is still falling.
It feels heavy today, I'll grant you that. But we have to frame this volatility against the trailing 12 months. Even with this slump, we are looking at a 148.5% surge over the last year. That is a massive move for any industrial stock. So the central question we need to answer today isn't about the daily flicker of the ticker tape. It's existential. Has MP Materials successfully transformed? Has it mutated from a commodity miner into a strategic defense asset that actually deserves a tech-like valuation? Or is the market simply ignoring the fundamental risks of execution and competition?
Well, I think the market is finally waking up to the reality of what this company actually does. And that drop is exactly why we're here. I'm taking the role of the valuation skeptic today. Because when I look at this, I don't see a tech company. I see a mining operation trading at 23 times sales, not earnings, sales, for a company that, let's remind everyone, is currently losing money.
And I'm taking the position that this is a national champion. You cannot value MP Materials using a traditional mining framework anymore. The government backing and the whole mine-to-magnet strategy have, I think, effectively decoupled MP from traditional mining cycles. You're looking at a hole in the ground. I'm looking at the Lockheed Martin of the energy transition.
The Lockheed Martin of dirt is a fantastic bumper sticker. But Lockheed Martin generates free cash flow. MP generates press releases. My position is simple. Guaranteed margins from the government are a nice safety net, but they don't justify an infinite valuation multiple.
I see why you think that, but let me give you a different perspective. To look at MP Materials as just a mining company is, well, it's a category error. It's fundamentally misunderstanding the asset.
It digs rocks out of the ground in the California desert. How is that not a mining company?
Because of the structure of the revenue and the backing. Look at the partnership with the Department of War. This isn't just a subsidy. It is a transformation of their entire business model. We have a price floor of $110 per kilogram for NdPr. That's neodymium, praseodymium, the key magnetic elements. Think about what that means. Between 2022 and 2025, the broader commodity market saw prices decline by 50%. If you were a standard miner, like Linus or a Chinese operator, you were crushed. MP was shielded. That price floor guarantees gross margins. It protects the company from the very volatility you were worried about.
Okay, guaranteed margins are nice, but let's talk about the cost of that guarantee. You say strategic importance. I say market distortion. Let's look at the reality. MP trades at 23.35 times forward sales. The mining industry average, about 2.2 times. You're paying a tenfold premium for a narrative.
You're paying for certainty in an uncertain world.
But where is the certainty in the financials? As of Q3 2025, the last 12 months show a net loss of $117.6 million. That is real money out the door. And look at why the stock dropped 5% on the 12th. It wasn't random. It was news that USA Rare Earth, a direct domestic competitor, received government funding without a price floor.
That's a single data point.
It's a signal. It suggests that MP's unique moat of government protection might be eroding. If the government starts handing out cash to competitors who say, hey, we can do this without the guaranteed payout, MP becomes just another high-cost producer in a very difficult market.
I'm not convinced by that line of reasoning because it ignores the scale of the commitment the government has already made to MP. You can't just spin up a rare earth mine overnight. MP has a 5-year head start. But let's dig into the core of this. You mentioned the government support, but I think you're underplaying the significance of Project Vault.
The new strategic reserve?
Exactly. Launched just 2 weeks ago, February 2nd, 2026. This is a $12 billion strategic reserve. It's not just a stockpile where they dump metal in a warehouse. It acts as a massive institutional customer. It effectively underwrites demand.
Underwrites demand is a fancy way of saying the government buys it if no one else wants it.
No, it means the government shields MMP from demand shocks. So if the EV market slows down or if there's a lull in commercial consumption, Project Vault steps in. And remember the mechanism, the contract for difference. If market prices drop, the Department of War pays the difference up to that $110 floor. We know their production costs are around $40 per kilogram. That is a locked-in $70 spread per kilogram, guaranteed by the U.S. Treasury. That's an annuity, not a mining profit.
That sounds foolproof on paper, but I'm sorry, I just don't buy that it's risk-free. Let me tell you why. China controls 85% of processing capacity. They have a history of using what we call the rare earth weapon.
Which is exactly why Project Vault exists.
But think about the economics of a price war. China could push prices so low, let's say they crash the global price to $30 or $40, just to bleed the American competition. Suddenly, the Department of War is paying a $70 or $80 difference on every single unit MP produces. That stops being a strategic investment and starts becoming a massive budgetary strain.
The contract is binding for 10 years.
Contracts are binding until politics change. We have a 25% tariff on Chinese magnets right now. That is a huge protective wall. But what if a new administration comes in? What if trade policy shifts? If those tariffs get repealed, or if the political will to subsidize that massive price spread evaporates, MP is exposed to low-cost competition that they simply cannot beat on a level playing field.
That's a compelling argument regarding political risk. But have you considered the alignment of interests here? The government holds 15% of the equity. They are in the money with a conversion price at $30.03. I mean, they aren't going to let this fail because they are an owner. But let's move to the operational side, because the valuation isn't just about government handouts, it's about execution.
Go on.
The mine-to-magnet transition is happening. Look at the numbers from Mountain Pass. In Q3 2025, NdPr production hit a record 721 metric tons. That is up 51% sequentially. That is not a company struggling to dig rocks. That is a company optimizing its output.
They are good at mining. I've never disputed that. Digging the rock out of the ground is the easy part.
It's more than mining. We're moving to stage 3. The Independence facility in Fort Worth is ramping up. We have the 10X facility targeting 10,000 metric tons of magnets annually by 2028. And we have the Apple partnership, a $500 million agreement. That validates the recycling capabilities. I mean, Apple doesn't sign $500 million deals with companies that can't execute.
I agree that the upstream mining is solid, but you're glossing over the precipice they are standing on right now.
Which is?
Heavy rare earth separation, dysprosium and terbium.
It's scheduled for commissioning mid-year.
Scheduled is the key word. Listen, for the benefit of the listener, we need to explain why this isn't just another factory opening. Separating light rare earths like NdPr is one thing. It's difficult, sure. Think of it like separating cream from milk. You can do it with a centrifuge. The densities are different enough. But separating heavies, dysprosium and terbium, from the rest of the ore, that is a nightmare.
It is complex, I won't deny that.
It's not just complex. It's like trying to separate skim milk from 1% milk. The molecules are almost identical in size and weight. This has never been done at commercial scale in the West. It is technically notorious. It involves thousands of mixer-settler stages, incredibly precise pH balances, and toxic solvents. If one stage gums up, the whole line stops. It is chemical engineering hell.
They have the best team in the world working on it, and they have the capital to solve it.
Everyone says that until the solvent extraction lines get contaminated. And look at the financial drag this is creating. You mentioned the production record, but revenue in Q3 2025 actually dipped to $53.6 million. Why? Because they stopped selling concentrate to China.
To build inventory for the downstream processing, that's a strategic choice. You don't sell your seed corn.
It's a cash burn choice. They're hoarding inventory for a downstream process that, I repeat, is not fully proven yet. They're burning cash to build a stockpile for a factory that might face delays. If they hit a snag with the heavy rare earth separation in mid-2026, that inventory becomes a dead weight on the balance sheet. They are betting the farm on a chemical process that is incredibly unforgiving.
That's an interesting point, though I would frame it differently. They are investing in margin expansion. Selling concentrate to China is a low-margin commodity business. You're getting paid for dirt. Turning that concentrate into separated oxides and then into magnets is where the value is. Yes, revenue dipped because they're holding back supply, but that supply is going to be sold at a premium once the facilities are online.
Once they are online, that is a big word.
But let's look at the potential if they do pull it off. I want to talk about the upside because the skeptics always focus on the risk and miss the magnitude of the opportunity. We are talking about a potential 5x return.
5 times? You think this is a $50 billion company?
By 2035, absolutely. Look at the math. To reach a $50 billion valuation, they need a CAGR of roughly 17.5%. Analysts are already forecasting revenue growth at 32.5% and earnings growth at 52% over the next 3 to 5 years.
Forecasts are not reality. They're spreadsheets.
But the demand is reality. We have a megatrend here. Demand for magnetic REEs is projected to triple by 2035. EVs, wind turbines, humanoid robots, these aren't niche markets anymore. And MP is positioning itself to be the dominant non-Chinese supplier.
Being a dominant non-Chinese supplier is great, but can they do it profitably? If your cost basis is double the Chinese cost, you're always going to be reliant on government subsidies.
That brings me to the Saudi Arabian joint venture. This is the piece of the puzzle people miss. They're partnering with Ma'aden and the Department of War. This facility alone could capture 20 to 30% of global demand capacity. And here's the kicker: energy costs.
It's energy intensive, sure.
It's massively energy intensive. We're talking about 500 to 1,000 kilowatt hours per ton of rock. In the US or Europe, industrial electricity is expensive. But in Saudi Arabia,
Electricity is 2.5 to 3.5 cents per kilowatt hour. Compare that to 10 or 12 cents in the US. That creates a structural cost advantage that even the Chinese will struggle to beat. That is how you get to a 5x return, massive scale, low costs via Saudi energy, and high margins via the dough price floor. That is a beautiful picture. It really is. But if the future is so bright, if the Saudi deal is a lock, and the technology is ready, why is the CEO selling?
You talking about Litinsky?
James Litinsky, the CEO. In January 2026, he sold 300,000 shares at around $64.
That was a Rule 10b-51 planned sale. Executives sell stock. It's standard diversification. He has to pay taxes. He has to balance his portfolio.
It might be standard, but signals matter. He sold into the rally. If he truly believed that $50 billion valuation was just around the corner, why sell at $64? Why not hold for the triple digits? If I have a winning lottery ticket, I don't sell it for half price just to diversify.
He still holds a massive stake. He's the largest individual shareholder.
Sure, but selling 300,000 shares suggests that maybe the internal view on valuation is a bit more grounded than the hype. And to hit that 5x target you're talking about, MP needs perfect execution. They need the heavy rare earth separation to work perfectly on the first try. They need the Saudi refinery to come online without geopolitical hiccups. They need the 10x facility to ramp without issues. In a high-risk industry like chemical processing, betting on perfection is usually a losing strategy.
I see why you think that, but I don't think it requires perfection. It requires persistence, which they have shown, and it requires support, which they have locked in. The Department of War is not going to let a few technical snags derail a project that is critical for national defense.
Let's step back and look at the competitor landscape again. You mentioned the Saudi JV, but domestically, USA Rare Earth is coming up. They don't have the price floor, which you say is a weakness, but it also means they might be leaner. They might be more aggressive. MP has been the only game in town for a few years. That exclusivity premium is going to fade.
Being the first mover with government backing is a massive advantage. The barrier to entry here isn't just money, it's permitting, it's technology, it's the supply chain. MP is 5 years ahead of anyone else. USA Rare Earth getting some funding is fine, but they are miles behind in terms of actual steel in the ground.
Steel in the ground is one thing, Magnets in the box are another. We still haven't seen commercial-scale magnets leaving Fort Worth in the volumes that justify this price.
They are ramping. General Motors is the foundational customer. They are building the 10X facility. This isn't a science project anymore. It is an industrial ramp.
It's a very expensive science project until they turn a profit. And let's remind the listeners, Q3 2025, net loss. They are not profitable yet.
But they are expected to return to profitability in Q4 2025.
Expected. We will see. The graveyard of the stock market is full of companies that were expected to turn the corner.
The trajectory is clear. You have the upstream throwing off cash, or it will be once they resume sales. You have the downstream coming online with higher margins, and you have the government floor protecting the downside.
The government floor protects the revenue line, not the bottom line, if their operational costs blow out. If they have issues with the heavy separation, their costs go up. The government doesn't cover cost overruns, they cover the market price difference. If MP is inefficient, they can still lose money even with the $110 floor.
That is fair, but their track record at Mountain Pass suggests they are anything but inefficient. They have consistently beaten production targets.
On the easy stuff, light rare earths,
It's not easy. It's just earlier in the process.
it's significantly chemically simpler. The separation factors are wider. The heavy stuff is where the money is burned.
And that difficulty is exactly why the valuation is justified. If it was easy, everyone would do it. The moat is the technical difficulty combined with the capital intensity. MP has solved the capital problem with the DOW partnership. Now they just need to execute the chemistry.
Just execute the chemistry. That's the most expensive just in the world.
Look, we can debate the chemistry all day, but the market is looking at the geopolitical reality. The U.S. needs this. The Department of War needs this. They are not going to let this fail.
Too strategic to fail often means equity holders get wiped out while the government bails out the operations. We saw it with GM in 2008. The company survived, the shareholders got zero. Just because the company survives doesn't mean the stock price at $57 is safe.
I disagree. The equity stake the government holds aligns them with us, the shareholders. They want the stock price to go up too. They are holding warrants. They are holding preferreds. They are on the same side of the table.
For now.
We are nearing the end of our time, so let's try to wrap this up. How do you summarize the bear case here?
I think it comes down to this. MP Materials is currently the only game in town. I give you that. But you are paying a massive tech multiple, over 20 times sales, for a mining company that is currently losing money and is about to undertake the most difficult chemical engineering challenge in its history. And you have new competition rising domestically. I think the risk-reward at $57 is skewed to the downside. The technical risk of that heavy separation is not priced in.
And I see it completely differently. This is an asymmetric bet on national security. The downside is capped. The Department of War price floor puts a safety net under this company that no other miner has. And the upside? It is linked to the biggest megatrend of our lifetime, global electrification. You have a capped downside thanks to Project Vault and an uncapped upside thanks to the macro trend. 2026 is the year of proof.
Well, we won't have to wait long for the first scorecard.
Exactly. The Q4 2025 earnings call is coming up on February 26, 2026, just 10 days from now.
That will be the decisive moment. We need to see if that return to profitability is real, and we need updates on the heavy rare earth commissioning,
We will be watching closely to see if the strategic premium holds up.
and whether that consolidation at $55 is a floor or a trapdoor.
Whether NP is a safe government-backed vault or a speculative bubble, we leave that for you to decide.
Indeed.
Thanks for listening to the debate.
If you like this video and want to watch more content like this, then subscribe to the channel. Thanks for watching. See ya.